from London. Welcome to the RANsquawk European morning briefing for today, Wednesday the 5th of October. Following the sharp rally into the Wall Street close yesterday, we've seen European equity markets trade into the green today, particularly the financial sector, noting the comments in the FT article from yesterday, the European finance ministers considering recapitalising European banks. That has been confirmed today by the Spanish finance minister, Elena Salgado. She did say those informal discussions on bank recapitalisations did take place. So we've seen the French banks in particular outperform BNP Paribas and SocGen up sharply today, also being supported by comments from ECB's Noyer. He did say that France's AAA sovereign rating will not be affected by any guaranteeing of Dexia in Belgium, who are confirmed to be splitting off into a bad bank of around 180 billion euros of its toxic assets there. Looking elsewhere out of the Eurozone, we've had the services PMI data coming in lower than expected across the Eurozone, particularly Germany, the German number coming in lower than 50, so showing a contraction there for the first time in a very long time, and we did see some risk aversion on the back of that. However, markets have largely shaken off the bad news. Also overnight, the triple-notch downgrade by Moody's of Italy's sovereign rating has been largely shrugged off. We saw Italian BTP futures trade down sharply at the open. However, with the securities market programme from the ECB buying Italian debt on the secondary market, we have seen the Italian and the Spanish in particular 10-year government bond yield spread over bunds tighten quite significantly through the European session. Looking elsewhere, in terms of fixed income, we saw Germany come to the market with a Schatz auction, the yield on that at 0.46%, the lowest on record, so another successful auction there out of Germany, following the slight weakness in the bubble auction last week, so reaffirming Germany's position as the European benchmark there for debt auctions. We also saw out of the UK the services PMI coming in a lot higher than expected, and we saw a 40 pip move in cable. Following that, we saw the UK GDP data that came in slightly lower than expected at 0.1%, the final reading for the second quarter GDP. However, this was noted to be due to different methods of calculating by the UK's Office of National Statistics. Just worth of note for the energy complex, it was up quite sharply in overnight trade following the IPI data last night. However, due to the general weakness in commodities, we've seen spot silver fall at around 5% today, with spot gold also down sharply, and we have seen the energy complex give back some of those gains on the back of that. Looking elsewhere then into the rest of the session today, starting then with the US data, we'll have the ADP employment and the Challenger job cuts in terms of the early part of the session. Later on, we're looking out for the DOE crude oil inventories. Also later on, scheduled comments from US Treasury Secretary Geithner. But overall, rather quiet session in terms of data out of the US. A lot of focus will be from the IMF as they release their outlook report on the Eurozone later on into the European afternoon. But that's enough from me. Have yourselves a great trading day.